All right, you're gonna
No,
send me.
no, no, no. You get a pick because it's Frank's charts. That's better.
Oh,
You get a
okay,
pick.
there you go. Okay, I'll let you go first. I'll
Okay,
let you go first.
I'm going to bring you something you guys have not heard of in a very long time. Let's start with PayPal. PayPal, PayPal here is in a PayPal. I'm sorry, guys. It's been a volatile
It's been a
week. It's
volatile
been a
week. Nothing.
volatile week. You got to put
Yeah,
the smile on sometimes. PayPal here is in a nice little low base environment with a pretty clean trigger underneath that 179 level. We'll take a look at that very quickly. But what I like about here, and Mark, you pointed this out just a little bit ago, but it's something you can look at over the last month or so. Every time that 9 EMA catches up to PayPal's price action, PayPal has a tendency to get rejected. I like the price movement here. You don't have any earnings to worry about. It's not post earnings analysis. You're talking about a pretty clean low base environment with the 9 EMA catching up to it. When you drop this down into an intraday level, you're going to see in the clean nature of that level right underneath 180. We called it 179. You look at there, but yeah, I'd give it about 179 here, Frankie.
hmm
179's got to be broken. The question is, where are you comfortable with a stop loss here? And obviously, you could go all the way up to the top and write that 9 EMA. That's
Yep.
probably the preferred method right now, is to
Agreed.
keep that stop loss above that 9 EMA. You're going to be taking a little bit of an additional risk because of the increased volatility this week. It's about $10 on the stop loss. But again, if you're going to make the trade, you got to be based on the pattern. And right now, that 9 EMA is so important. I don't think you want to get stopped out at 185
100% agree.
when literally the pattern is at 188. So
Oh
I
yeah.
think you got to get it above that 9 EMA. There are some intraday levels that are interesting. For example, right here at about 184, that does interest me. 186 interests me. But again, you got to ask your question at the end of the day before you place a stop loss. Do you really want to get stopped out at 186 when you have a very clean stop loss placement above 188, 189?
hmm
And I just think the 9 EMA plays here. So entry underneath 179, stop loss above 188, right where that 9 EMA is. You take the little additional risk and you're playing it to the downside with a confirmed breakdown. Now you see how important this level is over here, right? You see that level play out over there. You do got some old chop down around that 170 to 175. I do think that has to be in that first tier in terms of where you're kind of tracking. But again, I don't think that's your first target. I just think you got a little bit of concern. Maybe you put an alert there to see how the market behaves at a double bottom around 173. But outside of that, I do think you're looking a little bit south of there, maybe around that 160 and ultimately around the 200-day moving average on the weekly chart
Yeah, I was
there.
gonna
So
say.
I think you're ultimately looking right there around 160-ish, which would still make your 2-to-1 reward to risk ratio work out. So first one I'm bringing is a little bit on the bear side, but I like the cleanliness of the breakdown here. Frankie, what do you say?
Yeah, I got nothing wrong with it. You hit my only, question that I was going to have was kind of those old lows from back, last
Yeah, yeah.
September in that 170 ballpark, right?
I
That's
think you got to be concerned with them. I
but
do,
I think
but
they're something you watch, right? Like you said, they're
well,
if they're your target, you're probably not trading this, right? But they don't have
no,
to be.
no.
We just want to keep an eyeball
I,
on them. And I
I,
think
I
that
think I think they're in the vein of T1.
I
And
think
as
so
long
too.
as long as you're 1-to-1 on T1, I think you're fine and you're in the zone there. I think you got a little bit of like a 0.89 versus 1 on T1 here, but I'm okay with that. Like,
Sure.
especially with the volatility. I mean, if we do get a breakdown and a quick journey, I mean, we could risk adjust that stop loss fairly aggressively once we do see that breakdown. So we'll see some intraday levels at that point. I'm not too worried about that. I think 160 is kind of where your real target is, and that's right in that 2-to-1 zone.
Yeah, and I would agree. I would agree with that. That secondary, that 200 weekly, just right north of that,
Yeah, you can't
seems like
target
the next.
underneath that.
No,
Like,
you don't want to go under there. But I
um,
mean, that just really, if I'm thinking about this from a buying perspective, I'm excited. PayPal's taken a beating lately because I'd like to own it, to, add it to my long term
oh,
portfolio.
guys,
I'm
that's
staring at that 200 and saying, you know what? Last time it got to that 200 weekly, there was a pretty good bounce. Maybe
yeah.
I'll start sniffing around there. So I
Well,
do
can I
think
ask
that's
you
a
a
very
question on
logical
that,
place.
Frankie?
Yeah,
As we're navigating, because PayPal is a really good company in my
it is.
opinion.
I agree.
Okay, as we're navigating these bearish downtrends, don't mix two different forms of analysis. Short-term traders will trade anything, even quality companies they like. But when you're looking at a lot of these downtrends, aren't you also in the back of your mind just thinking, I can't wait to own more of that, or I can't
Oh
wait
yeah,
to
there's
own
some
this?
things that
Like
yes, there
there's
are
a
some
lot
things.
of things that I think are going to have amazing buying opportunities on.
Yes, there's some things. PayPal is one of them for
Yeah,
me.
for me too.
That's like, yeah, this is
And
great.
that
Keep
still wasn't hesitate a short here.
not at all, not
Not
at
at
all,
all.
because that's in theory, right? That might be
No.
$80 a year from now, for all I know.
We don't know where that
So
support level comes in.
right now, the
So
weekly,
yes on the swing trade though.
yes on the
PayPal,
swing
yes on the
trade,
swing trade.
yes, yes
Okay,
on the swing
good.
trade.
All right,
But
so I'm keeping score here, Frankie.
I'm going to give
I'm
you.
kidding because we can stack the deck.
We can, and we'll both lie and say we won, right? So it doesn't do anybody any good.
We act like good politicians. We just declare victory.
That is true. That is true.
I'm
All right,
judging you both harshly.
all right, going to judge us harshly. Fair enough. All right, here.
I hope he's not judging me too harshly. Use my stock as an example of
Oh
bearish
no,
analysis
that's a
earlier.
good trade.
So,
Okay,
yeah,
Like
that's
silence is confirmation.
I like it. I like it.
Like-
Frankie, what do you got for me?
All right, so listen, you guys have heard me say lots of things about grocery stores for a while, right?
We were tracking Kroger's
have
earnings
become-
earlier.
I'm the grocery store man.
You become
He
the
loves
grocery
them.
store guy.
He
I've
loves
heard
them.
you like talk about grocery stores nonstop for like 4 or 5 months now.
I enjoy a good
But
grocery
you know what
store.
he really likes? He likes cheap grocery stores.
Now,
Well,
Frank,
and-
did you know that the old grocery store you used to go to closed down?
It did.
It
It's
did.
unfortunate. I enjoyed that. They would
Yeah, it was
actually
a
let me
nice
take
one.
they would let me take my dog in as I did my
Frank got to
shopping.
take his dog into
Yeah,
the grocery
well,
store.
Yeah,
Small
not many
town
grocery.
Frank is
USA,
so
baby.
personal. I went to his grocery store once.
Hold on. Can we tell
Every-
grocery store later?
Yes.
Thank you.
All right, so let's talk grocery stores.
Yeah, which one are you
continuation.
going with? Which one are you
I'm not going with one. I'm going to cheat. I'm going to get 2-4 here. Now I like Kroger,
Is
but that's
that
not
how
who I
you-
want to bring.
No, I just brought it up because we were talking earnings with it
Yes,
earlier.
I
Yeah.
do like Kroger.
Hey, can I ask you a
as-
quick question on
Sure.
Kroger? If you get a doji on Monday, do you have a different? Like, is this in a zone? for
Well,
you?
100%. It's in a zone. Its issue is going to be it has to compete with Albertsons, ACI
Okay,
on a
ACI.
nice little break.
That breaks
Yes.
clean too.
That is very, very clean,
That
and
breaks
Albertsons
clean.
has been very, very well
Mhm.
behaved lately. But it also
I
has
like that one.
to compete with Sprouts, SFM.
SFM.
Mm.
SFM's got a really nice little
That's a
flag-based
flag-based
pattern
pattern.
off of that 9. We do have some overhead on top that we don't have on
I
Albertsons.
don't mind that overhead though. You're tracking the flag.
No, that's you're trading the flag and you're
Yeah.
you're using that as a target one
Yeah.
or swinging into it and
So
then
do you-
looking for a breakout.
So is this a would you rather?
So this is you only get to choose one.
Okay.
You which one do you prefer? Do you like the squarey box nature and the highs of Albertsons, right? Albertsons has been a monster.
It's been a monster, but it doesn't have the same momentum that Sprouts has right now. I'd say Sprouts has current short-term momentum a little
agree
bit
with
more
that.
than Albertsons here. I think honestly this comes down to personal preference, quite frankly. I think if one works, they both work type scenario. But the question I have is, do you prefer flag-based patterns or do you prefer high bases? And for me, I like a clean breakout on a high base, probably. I don't know, a pure bullish retracement. That reward to risk ratio on a pure bullish retracement might be my favorite. But in terms of breakouts, and I would put a flag as you're breaking out of intraday resistance. But
Right.
just my mindset, Frankie, when you break out, I'm still looking short term left of the chart, and there's still a little bit of overhead when you break out of that flag. And so I do like the high base a little bit more. Mark, what about you?
This isn't usually. ACI is more my cup of tea, and I'm of course lamenting the naked put I sold at like 16 bucks last year. Should have just taken ownership, right? The Sprouts chart is not my cup of tea. ACI is cleaner on a breakout for me personally. If the longer it cooks, the better I like it on this type of thing.
Mhm.
But yeah, I like the ACI chart. I just cleaner. It just when I play these directionally, I don't want to have to overthink it.
It's a tough question. They're both looking pretty solid. I think I'm going to side with Matt in this case. I think I'm going to choose Sprouts myself, but I would not even like argue with somebody who chose Albertsons instead.
All right, what you got next, Matt? You got computer problems.
Oh, well, he's got computer problems, so we'll
Matt
let him.
says go long on ARC. Buy the dip.
The dip on ARC. That sounds exactly like something Matt would say, and I can only imagine. We'll give him a minute while we
Matt
do.
says YOLO a bunch of out of the money calls on the SPY. Just,
Matt gets crazy when his technology revolts on him.
I know, man. You're on mute on the thing, so I couldn't even hear you if you were speaking, right? Frank, give us another chart where Matt works.
All right, we'll give Matt a moment to come back, and I'll take this opportunity for another clean break that might be something that would intrigue you. I don't know, Mark, probably not, especially in this market. You're probably looking at buying things that have taken, bullish on things that take a beating when you get your signals, and not necessarily breakouts on things that held up well during this time period, but one that has held up really well and is very clean and constructive, at least as of right now, is our old friends MMC, Marsh McLennan. Very clean little triple top type of pattern developing right at about 170. Really nice way of holding up. I think Matt's in charge of the screen, so I don't think we can see it right now. So we might have to look on our own. But it's really established a very nice, clean top at just approximately 170, had a big retracement, V-shaped style back to the resistance the first time, pulled back with the market this last week or so, but has created a higher low, working back into that resistance level today. It's not the cleanest thing, but it kind of looks like a cup and handle if you get a little bit creative.
All right, guys, can you hear me now?
We got you back.
You're
back.
All right.
I was trying to.
I had some audio issues. I had to figure
noticed.
out.
Well, we were talking about MMC while you were away.
Sorry about that.
Yeah, no problem. When tech turned on you, I remember I was doing the market recap years ago, and my mic died, and it was just me. Right. And so I was trying to, wave to people and let them know that it was the end of the show. So I'm not going to judge.
Yeah. So MMC. So this was your second one?
Well, this was my filler one, and I'll use it for my second one since you're back. Maybe
I like the cup and handle breakout here.
We got a little bit of a cup and handle. We've held up nicely relative to it. Right. Very clean chart. We're Mark and I were kind of talking. I'm partial to look at things that have held up relatively well, whereas he's, getting excited about some of the deals he's about to get, right? And it's just a different approach to trading is all. So can I sign you up, Maddie? Nothing crazy here on a 170-ish break on MMC?
Yeah, of course. I mean, you got to like anything that has not gotten caught up in the volatility cycle of the marketplace. Here on MMC, you really haven't violated any support level. You got a pretty clean cup and handle, actually. And it gets very clean above 170. And you don't have a close above 170. You have a couple wicks above 170. I don't think you care about that. Obviously, you're looking for a close because this is the market we live in right now. But a close above 170, I think you got to be looking at MMC here. Yes.
My favorite thing about this chart is the last time the market took a slide, MMC's chart looks almost exactly like the market, right? Very similar, very pattern, not even close this time.
Yeah.
Not even close this time. It's a totally different characteristic in the market volatility than it had last time.
Awesome. Yeah, I like it. Is it my turn?
It's your turn.
Okay. So I went bear on my first one. I got 3 bulls. I'm gonna go with blue chip juggernaut. Home Depot here. Post earnings, secondary pattern has been a height base. We really haven't closed above it, but I love the fact that you've held up against the volatility. And now you tested the 90 EMA for the first time this week, It held that as well right there, about $400. You're looking at a couple of wick tests above the resistance level when you're looking right here above 410, right there at about 415 from a wick perspective. But I like the channel as it gets above 415. As it gets above 415, it starts to clean up a lot more. What do you guys think about Home Depot's high base above 415?
Yeah, absolutely. You can 100% sign me up. The only caveat I will throw out there, which is one that I'm sure you would agree with, and and I think probably in your head goes without saying, want to make sure that we hold these lows. We don't go below these recent lows before we ultimately break out, right? So we can dip a
I
little
think
bit
you
on
got to
Monday.
hold.
We
Yeah.
can see that type of stuff. But if we
Well,
end up breaking those lows, it becomes something different. But as it is right
can I
now,
speak to that very
yeah,
quickly?
absolutely.
Right? Because what you're talking about is when you're looking at coming from 400 into that breakout, that's a distance to run going into
Okay,
that
move.
breakout. You like the build from an intraday perspective, as you've seen over the last 2 days. Look at the higher highs, higher low scenario. So you kind of like that lead in as you're going into that breakout of 415. Obviously, it got caught up with the volatility post market cash open, as you're seeing a little bit of fade down here, but it did test the highs earlier, did not break those. I think it cleans up above 415 quite a bit.
For
And
sure.
I do agree that if you do give it up from here and it comes all the way down to 400, you're probably resetting that intraday build. But if it holds that 9 and you start building, I think you're still fine.
Absolutely. Absolutely. And
Yeah.
I'd have no objection to it. I like the relative strength. I was actually looking at it a couple days ago, and it was I just couldn't figure out a way you could get in off of the 9.
No,
Right.
you can't.
It just,
Yeah.
I mean, I
You
like
guys see a
that.
breakout here.
I like that style of trade, but I was trying to figure out a way to make it make sense, but it did not. So I definitely like your selection there.
Awesome. What do you got next?
All right. I'm going to throw a bear at you now.
Another thing I like
Oh,
about
yeah.
this chart, you wouldn't know the market's doing anything.
That is
No,
true. If this was
no.
the only thing you saw, you'd just be thinking
You'd be like, you
business
wouldn't
as
know the
usual.
market's doing anything.
Yeah, I'd agree. Yeah, that is a fair point. All right, Maddie, I'm going to throw a bear at you. This one's going to be, you're gonna fight this one, I'm sure, and that's Peloton. We've got Peloton here. I don't think Maddie is going to fight me on this. We do have that little
No.
bit of a breakdown developing. We had that big nasty earnings response, right? Kind of did the grind, kind of the popped in towards the 9 and pushed us down. And now we're kind of putting that low base type of scenario, kind of a reverse Home Depot, right? I would like to see this break support before it went above, that high from the 26, if I could make it, look exactly the way I want it to, at least. But nothing fancy here, just a breakdown on Peloton. They don't really, they do have the old highs after their original IPO. That's going to be somewhere around $35, if I'm not mistaken. That was kind of their high after their initial IPO run,
Where's
if you
your
will.
break? Where's your break, Frankie? Is it the, like, if I go intraday, I really like a 42 break. If I go
Yeah.
daily, I like a 41 break.
Yeah.
If I go weekly, I like a 40 break. You know what I mean? So
Yeah. I feel you.
So I love the position it's in from, I mean, low base type analysis, very, very clean intraday. But again, I'm tracking 42 intraday, 41 daily, and 40 weekly. Where's your
I
level
would
that,
be I would
yeah.
be looking at last week's low, which is just north of 41, I believe 41.13, if I'm not mistaken. So I would be looking at the 41 level, as far as
Yeah, okay.
the
So
actual
the daily price. Yeah, I
the
agree. I
daily
agree.
price action, last week's candlestick. I think that shapes it up for me, at least. 42 is just a little more aggressive than I would be,
Yeah, that's
on
a
it.
day trader trigger. I agree. 42. I think 41. I think 41 as well. I agree.
So yeah, Mark, anything you'd add?
No, I mean, you guys are good. Listen, other than Deutsche Bank said that Peloton's buy at these levels. So
Yeah, that's going to have a massive impact on my
and
analysis.
Deutsche Bank say, hey, buy the dip on Peloton because people like to cycle.
Would this be an appropriate moment for me to detail all the times Deutsche Bank got it wrong?
Oh, I
it would
figured
be
you
a
would
funny moment
appreciate the
to do it.
particular bank giving commentary
Like
on.
it's the number one bank that shouldn't ever talk, like ever,
By the
never
dip.
talk.
Deutsche Bank said so.
So
Oh.
didn't this stop being the dip a while ago, though, Deutsche Bank? I mean, at what point in time is it no longer a dip?
I honestly believe Deutsche Bank had a buy on this like at 140.
Frank, that
so.
is a great, if somebody, yeah, that's a great theoretical question. At what point does a dip no longer become a dip?
The first time it violates support.
Well, according to us, yes, but just the way the term is used, right?
Oh, no,
I guess it's when you're out of money.
Everything
when you're out of money.
When you don't have any more money to throw to the dip, it's no longer the dip.
Okay.
Yes.
All right.
Yes.
All right,
That's it.
Yes. That's the practical, right?
Yes.
Like when I'm out of money and out of
buy the
margin,
dip. I'm out of
no
money.
longer a dip.
No more buying the dip. Now, for us, it's when it violates short-term support.
Yes.
Yes.
100%.
Okay.
All right, Maddie, what you got for me?
Okay, are we on last round here? I gotta go one more.
We're on last round,
Okay,
and
last
then we
round
got
here.
the lightning. What can you squeeze in round, right?
Do you want bull or bear?
Give me a bull.
You want a bull? All right. I'm gonna let you pick then.
Ooh,
I got Costco's retracement.
they've got
Okay,
earnings
but they
next
got
week, don't
earnings.
they?
So
Yeah.
yep, they got earnings. So let's go to the second one. Pfizer flag off the 9.
I was looking at Pfizer.
Now, mind you, it is a breakout. Like I think you got to
yes.
break out.
Yeah, I think you're playing the breakout. Yes. Yeah. So the moves off of the 9, but you just didn't get that opportunity. If you did, it was so fast, right?
Yeah. Pfizer off the 9 stood out. Now my bear, and we'll come back to Pfizer here in a second, was Novartis. Like the low base analysis post earnings here.
Yeah,
right?
I would agree with that.
Kissing off that 79 support level. Look at that on a weekly. Should see some more depressed price action into the 75 level. So that was the other bear, was Novartis. But let's go back to Pfizer here. Pfizer, the one thing that stood out to me was the 9 EMA here on Pfizer, right? It just really stood out to me. It's not clean. It's very choppy. It has not bucked the volatility, but what it has done is it has not violated support, unlike almost 80% of everything else in the marketplace. You look at it on a 1-hour chart, though, Frankie, and it starts to clean up above 55. It starts to clean up above 55. Currently, you're at 54. It starts to get a little bit clean above 55. And so you do have some choppy wick action between 54 and 55, and it does look crazy. But again, we're looking north of 55. It starts to get cleaned up there as well. I like the 9 EMA holding the line of support. I think it does get cleaned above 55 on Pfizer, and I think I do believe it fits a better theme for the market today than a lot of the other stocks in the market.
Yeah, I would agree with that. Yeah, that is very clean. I was actually looking at the hourly chart myself as you were talking about looking at the hourly chart. That 9 continuing to push up, continuing to live above it. That is a very good sign, and that is a very important thing for the development in the coming days, right? On this situation. So yeah, my only theoretical question would be, is risk to reward going to be something that we're comfortable with, right? Which is subjective, right?
It is subjective because the targeting here, when you're looking at that, I think stop minimum has to be under 53. You could go all the way down to 52. That would be like the pivot point of stop loss.
Mm-hmm.
But I do see a floor here intraday at that 53 level right here. You also have the 9 EMA right there around that 53 level as well. The 9 EMA I think is 59.2. And so I do think if it's going to be building here on the breakout, I think you can use the 9 EMA right there at 53 as the stop loss. And at that point, you're really only tracking about a little bit more than $1 of risk with an entry above 55 and about $2 of risk with an entry above 55 and a stop underneath 53. You got to be targeting at least 57, 58 in that environment on T1. And you got more than that, in my opinion, on Pfizer here, as the trend has been building against that 9 EMA. So I think it's tight, Frankie. But I think a lot of things are tight from a reward to risk ratio with an increasing volatility.
Yeah, I think so as well. And so I think it's probably one that probably doesn't break Monday, right? I mean, we're within the range where it could, but it would be kind of a no sell day. correct,
Yeah,
on Monday.
like Tuesday, Wednesday,
So
little build
which
intraday
should
into
increase
that
that
55.
9,
I
right? Because I
agree. I
like the
agree.
idea of that 9, getting that stop loss below that 9, wherever it is. So if we get, one or, get
Well, and
Monday,
by the
Tuesday
break,
into
it could be
break.
54.
Exactly. And then
Like
that
we
risk
don't
to
know.
reward looks really, really intriguing. So this will 100% be on my watch list going into
Awesome.
next week.
Awesome. Well, that was mine for Frank's charts. What do you got, Frankie? You got one more, right?
I will always take one more.
Okay, one more. One
I'll
more.
always
One
take
more.
one more on
If we don't say one more, we won't stop talking.
that is technically true. That is
Yes.
technically true. All right,
Oh,
so we
there's a
get
breakout on that 100 out of 100 times. Are you kidding
yeah,
me?
that's
Yeah.
that's yeah, that's like 90 to 100, right? It always happens.
Yeah.
Every
Or
time.
Yeah. Yeah. It always happens.
so it always happens. I want to just this one's going to be one we're going to project a little bit, right? So I don't these guys. I won't even be bringing them to the scouting report meeting because they're going to need some development between now and later. But I want to talk about them with you guys here, and that's TPX. Temper Sealy. We talked about them a while ago on their break, right? Then that breakout. Uh, what I like about these guys, Maddie, is when you look at them on a weekly chart, they've been very consistent. You see it on the daily.
Yeah, the
They've been,
retracement on the weekly is going to
they've
be
been
decent. Yeah.
very consistent, and you look at the weekly. Now we're right into that top of that range, and we're seeing, as expected, some selling. Right now, what I'm looking for, and I'm kind of just kind of mapping this out in my head, and maybe have you guys give me some feedback here, is I'm looking to see these guys ultimately. Hey, I want to see the sellers come in here, whether they're folks that bought it a couple days ago, or new bears coming in and playing that trend line. I'm glad that they're doing this because I'm kind of seeing this as if we get pushed down a little bit and we create that higher low, and then we ultimately break through that trend line, we're getting that double whammy bear stop out day. Right now, that's a lot of ifs. That's why it won't be realistically on the reports this week. Is we need a little downward movement. We need to create that higher level of support. We need to work off of that support, break through that resistance. But that would really clean up a lot of time frames in my book if we were able to get all of that development. I don't know if I was clear in that, Maddie. What would you say to any of that?
I think it's an interesting pattern here on the weekly, actually. You look at it testing a fairly known level of support, number one. You got a fairly consistent downtrend, number two, and you're really putting a lot of pressure on that 45 level of resistance and breaking out. And you'd be breaking out of both a horizontal level of resistance, but you would also be breaking out of this short-term downtrend. And a lot of what you talk about when you were kind of describing your analysis, Frankie, is when you look at the daily chart, all of that just takes a little bit of time here.
Yep.
Right? It takes a little bit of time here. And so you got to like the zone you're in, but you got some volatility here, a little up and down nature of the market. You want to see that slow down a little bit as you start tracking that breakout. But it would be a veto for me on the reports. But it's one of those ones where it's like, yes, I just think we're a little early. We just need to see it settle down before we see that breakout. But yeah, I think it's a radar pick. Yes.